Rule 1. Never lose money. Rule 2. Never forget Rule 1. Price is what you pay. Value is what you get. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. The three most important words in investing are margin of safety. Our favorite holding period is forever. Never invest in a business you cannot understand. Invest in companies you believe in. Buy a stock the way you would buy a house. Understand and like it such that you'd be content to own it in the absence of any market. A good business is not always a good purchase, although it's a good place to look for one. I try to buy stock in businesses that are so wonderful that an idiot can run them, because sooner or later, one will. The really great business is one that doesn't require good management. Be fearful when others are greedy. Be greedy when others are fearful. The stock market is a device for transferring money from the impatient to the patient. Look at market fluctuations as your friend rather than your enemy. Profit from folly rather than participate in it. The best chance to deploy capital is when things are going down. Remember that the stock market is a manic depressive. You need a temperament that neither derives great pleasure from being with the crowd or against the crowd. Temperament is also important. Independent thinking, emotional stability is vital to long-term investment success. Cash combined with courage in a time of crisis is priceless. You don't have to be an expert on every company, or even many. You only have to be able to evaluate companies within your circle of competence. The key to investing is not determining the competitive advantage of any given company, and above all, the durability of that advantage. Diversification is protection against ignorance. It makes little sense if you know what you are doing. Investors should be skeptical of history-based models. Beware of geeks bearing formulas. The investor of today does not profit from yesterday's growth. You can't make a good deal with a bad person. After all, you only find out who is swimming naked when the tide goes out. Today, people who hold cash equivalents feel comfortable. They shouldn't. They have opted for a terrible long-term asset, one that pays virtually nothing and is certain to depreciate in value. Derivatives are financial weapons of mass destruction. Wall Street is the only place that people ride to in a Rolls-Royce to get advice from those who take the subway. Do not take yearly results too seriously. Instead, focus on 4 or 5 year averages. Among the various propositions offered to you, if you invested in a very low-cost index fund, you'll do better than 90% of people. I never attempt to make money on the stock market. By far, the best investment you can make is in yourself. If you get to be 65 or 70 and later, and the people that you want to have love you actually do love you, you're a success. It takes 20 years to build a reputation and 5 minutes to ruin it. If you think about that, you'll do things differently. Too often, a vast collection of possessions ends up possessing its owner. The asset I most value, aside from health, is interesting, diverse, and long-standing friends. You get exactly one mind and one body in this world. You can't start taking care of it when you're 50. You'll go in the direction of the people that you associate with and associate with people that are better than you are. The partner in life is the most important. You want to pick a spouse that's a little better than you are. The most important thing to do if you find yourself in a hole is to stop digging. I always knew I was going to be rich. I don't think I ever doubted it for a minute. I insist on a lot of time being spent almost every day to just sit and think. If you just learn to communicate better, both in writing and in person, you increase your value at least 50%.